time out to talk about some numbers that have come through, and Lata is right here to take it forward for us. Lata, over to you.
Thanks a lot for that. Very good performance coming in from IDFC FIRST Bank. I mean, it's a mind-boggling 55% growth in deposits and 26% growth in advances. Net interest margins have jumped to 6.4%. And let's welcome the Managing Director and CEO, Mr. B. Vaidyanathan. Good morning, Mr. Vaidyanathan. Excellent performance. The market will be rewarding it. But 55% deposit growth, can you give us, I mean, is it sustainable? Was it a lot of bulk deposits?
So I think it's like 47%, I think, just to get the data right, or 49%. We got 2,131 crores from one large government deposit which came during the end of the month, end of the year, for 2-3 days, and by now it's vanished also. So we normally take it out of our numbers. So our real deposit growth was something like 45%. But we're happy.
But even that is very good, 45%. So even in that 45%, is it that number of deposits is a very big achievement. So I just wanted to know if there is more of bulk.
No. I called out the bulk to you. In fact, we are one of the people who actually call it out upfront in the investor presentation itself, by the way. We don't recognize that. But otherwise, except that amount I told you, there's no bulk in this. This is pure, high-quality, retail, sticky deposits. We are very happy about that, yeah.
Okay. But what is the sustainable rate, both in terms of advances and deposits? Even advances, 26%, right?
24%. And that's also very sustainable, because that's what we guide for. We said 22 to 24%. It's very sustainable. It's steady for our phase of the bank. We're at a relatively early stage. That kind of should be expected of us. But on the deposit side, I think many people are surprised. People are calling us all over the place. Hey guys, how are you really doing this? But I'm telling them, listen, it's not the first, you're taking note of us today. But see, our last 4 years, the deposits have always been strong. Somehow this institution is seen as a very positive, strong, customer-first institution. It's just coming.
How much did you have to increase your return on deposits, your rate of interest over the year?
We took it up, in the first 10 lakhs, we pay 4%. And that we didn't touch all through the year. And by the way, for 2.5, that number.
That's savings, right?
Even after FD must have been going with the beat of the time. By the way, in FD, we don't pay very much of a premium over the big banks for information. We are kind of moderate. And the important thing is that after we dropped down the rate from 7% to 4%, most people called on, hey guys, you're going to lose deposits, people won't bring in money. Well, it's still going at 40%. So I think the bank enjoys a good brand, and I thank all of you, or everybody listening, for the goodwill.
Okay. Well, the NIMs are obviously eye-popping at 6.4%. Now, along with it comes worries that you may be giving risky loans. So is, first of all, 6.4% sustainable?
First of all, NIM went up because we dropped the deposit rate from 7% to 4%, and it's like a good drop, and that helped us. The second thing about asset quality, you're absolutely very right, and this is something people should ask and we should answer, that our key parameter to watch actually is the fact that, our asset quality has always, gross interest, always been 2%. In fact, it's now 1.65% or 1.6% on the retail side. The net NPA has always been 1%. Now it's 0.55%. So that is one data point. But more importantly, to give comfort to people, let me tell you this, that we are really specialists in the lines of business we do. Our collection percentage, and that I should note this, collection percentage without taking prepayments into account and without taking arrears into account, pure EMI due, EMI paid, that is running at 99.6%. For like a year now, 99.59. So if a collection percentage stays at 99.6, we won't have an asset quality problem.
No, you
won't. We should be watchful, of course, but I can tell you data.
Well, your retail book is up 50%. That's also a steaming rate of growth. How much of this is unsecured?
No, first of all, again, you should check your numbers. It has different components actually in it, but some things like home loans are growing at 40-50%. Some of them are growing at 20%. All them at like loan against property is going at 13-14%. So let me just leave it at that. What is the second question, Lata?
No, I was asking how much of your book is unsecured.
Yeah. Now, on this front, we track this portfolio on cash flow of security. Close to about 90% of our book on the retail side is cash flow backed. And this is a very important note, by the way, don't take it trivially. Cash flow backed means there is money in the bank and we are dipping the money. It's like money escrowed there and we're pulling out the money from the bank. And there's no better security than cash, let me tell you. This is because we are specialists in cash flow financing bank. And number two, of the balance 10%, you have close to about 7%, which is liability group business, which is basically group lending security. But I don't call that security, by the way. But I treat cash flow as real security. Okay. So I want to just say that.
I take your point that cash is a very big security, but still the traditional way of looking at secured and unsecured is, collateral. So how much would be unsecured in that sense?
No, we have not specifically called out unsecured side, not specifically pulled out one channel. But like I pointed out to you earlier, cash is security. We should get this, and we should remember two things, by the way. We evidence the cash in the bank or assess the cash in the bank, and we lend to that. And then on due dates, it's not customer is paying you. We have the right to pull money from that account. It's the only product in which the customer has to pay you is credit cards. Everywhere else, we pull money from the bank. And that's a very big security dispensation.
No, the reason why I'm asking you about unsecured is Reserve Bank has told all the bankers to go slow on unsecured lending. So in your case, will this put some brakes on the pace at which you are growing?
No, we have been very stable about this. In fact, over a period of maybe 3 or 4 years, this is a starting stage of the bank. Obviously, we'll have more of, we'll have less of the secured lending. And as the bank is like 4 years now, our extent of the unsecured facility, or so-called unsecured, what I call secured to cash, that is actually coming down. But whether it's through property or through this one, like I said, it's cash back. But your question, there won't be any breaks on the bank, so to say. We are tracking ourselves to it. We track ourselves to two things at a time. Very important to know. I'm actually happy you asked this question. Two things to it. One is we track about what is the collection percentage. I told you 99.5%. Yeah. Number two, we track what is the SMA. SMA is the pre-NPA stage. That for our bank is 1.1%. 1.1. It used to be 2.2 even 1 year ago. It's coming down. And number three, NPA, I told you the numbers, 1.55 and 0.55. So we track these three indicators, and of course, credit cost. Our credit cost is only 1.1 or 1.2% for the year. So our indicators are stable, but more importantly, not because of numbers. You should track everybody, all your viewers and everybody should track what our pre-delinquency numbers are. And
yes, you want your SMA one. I agree with you. Just a very quick one last question because you're out of time and there's another embargoed interview. What margins should we work with? 6.4 or less?
Yeah, around that time, around 6.4%, 3, 4. Because actually we have a lot of old, high-cost liabilities coming for repricing this year, and that is at 8.8, 8.9%. We're going to replace it with maybe 5.8, 5.7% money. So that's 3%, of that money is going to add to income.
So that's heartwarming for your investors. That's heartwarming to hear for your investors. Many congratulations. Thank you very much, Mr. Vaidyanathan, for spending time.
And let me tell you, Lata, over the last many years, you've been one of the people who give us a lot of tough times, questioning our liabilities and assets and all that. But I say that hopefully from now on, you'll have even lesser questions to push me on. So, but
I will be asking I'm asking what investors ask us to ask. Thank you very much, Mr. Vaidyanathan.
Okay, sure. Thanks very much.
Okay, anyway, that is a near 4% jump in that stock.